So firstly, again, welcome everyone. Thank you so much for joining us today. For the ones that never attended a Build Beyond session, back in 2020, we launched this concept during the pandemic on behalf of checkout.com. And we aim to bring together a targeted group of professionals like senior product, e-commerce, and payment leaders. And of course, to discuss a variety of payment related topics. So it's a super cool kind of platform where you guys can listen in and they will share their experiences, they will share their challenges, they will share how they build beyond now and then, and they will of course share their vision on the future. So for today's episode, of course, we touch upon buy now, pay later, and what the impact is on large brands and how they can basically utilize the effect of buy now, pay later in the best possible way. On the one hand, to open up new markets, on the other hand, to basically grow their existing base, of course, to mitigate the risk for the end consumer. So we will touch upon certain risk and critics. We will touch upon the current situation. Of course, we are well aware about the current valuations, about PayPal and Apple stepping into the game, also from a super app point of view. So it's lots of fun. It will be a session last 50 minutes. And it's an extremely cool platform because you guys can enter your burning questions down here in the Q&A box, and we will try to answer them while we be live on this panel. A little bit about checkout.com for the ones that don't know checkout.com. We are a leading cloud-based global payment service provider where we are helping innovative brands like Kareem, even Klarna, Coinbase, Remitly, Farfetch, and so on, in order to manage their digital payments. And we empower them with a targeted, with a customized, tailored solution in order for them to drive more value and better customer experiences, starting with payments. So for today, I'm not alone. I'm joined by a fantastic crowd, and I would love to introduce them, and starting with Brent Hobson, Director of Payments at ASOS. Over to you, Brent. I think Brent kicked out. Are you still here, Brent? Sorry, over to you, Alan. Alan, Vice President of Ecosystem at Avato. Over to you, Alan.
I think Brent is live again. Hi, Brent.
I'm back again now. Sorry, I dropped off. You go and I'll follow after.
Oh, good. It was your moment of fame, but let's start with Alan. Over to you, Alan.
Wonderful. Thank you so much. Hi, everyone. Great to have even someone from Lebanon here in the call. Hi there. So I was previously running our buy now, pay later business Afterpay for the German-speaking markets, and now I'm globally responsible for ecosystem growth. Means I try to follow as close as possible the buy now, pay later global dynamics, and I'm very happy to discuss that with you today. Handing over to Brent.
Hi, welcome everybody. My name is Brent Hobson. I'm the Director of Payments for ASOS and on the board of a subsidiary called ASOS Payments Limited. I'm looking forward to sharing my stories and experiences with buy now, pay later today. Over to Anastasia.
Yes.
Sure. Hi, everyone. I'm very pleased to be here also and share my experience. I'm a responsible product manager for alternative payments method integration in checkout environment and ecosystem, where we basically cover different payment methods across the globe, from the local perspective also to some specific markets, and really happy to answer any questions from the technical point of view and product development.
Thank you so much, guys. And again, another welcome. And maybe a funny or great anecdote about ASOS. I think ASOS was one of the first launching partners of Klarna. So they really educated the market back in the days in the UK. And about Avato Financial Solutions, it's quite a dinosaur, Ellen, because they actually started right in the 70s doing it offline. So ordering your clothing in an offline magazine and then getting your clothing, and then you needed to pay. So you guys are well familiar with this topic. And me, Stephen, part of the strategic accounts team at checkout.com, leading the European efforts for our global enterprise merchants. And again, another welcome for today's session on Build and Beyond about Buy Now, Pay Later. So for today, just kick it off. What is your experience with Buy Now, Pay Later? What are you seeing in the current market? Why is Buy Now, Pay Later rising so fast, even though the current situation around all the valuations, all the predictions are still there that 2026 will be booming? Over to you, Brent. What do you feel? Could you share?
Wow, it's been 5 years now. It's been a long journey with Buy Now, Pay Later. I came after actually ASOS had launched, but I think they saw Buy Now, Pay Later as a similar product to credit cards, where they expected a 95% acceptance level and a low cost. Then it's a slightly different product, but we've learned over the last 5 years that it is different. We've now launched in 13 countries with 4 providers, and it's definitely a product that is needed. There's a lot of disruption and change at the moment. We forecast this about 2 years ago, looking very similar to the mobile phone industry, where a lot of the mobile providers many years ago, Vodafone, etc., had all the treasure in their chest and actually ended up being dumb pipes. And what's happening in the market at the moment is you can see that more and more players are coming in. The investors are backing these companies. They see it as definitely a payment method that's going to stay. You can see it's going to stay. But the problem is, as more and more enter, it becomes very competitive. You see acquisitions. You see acquisitions in different areas, like, for example, Square buying Afterpay. You see Zip buying similar methods. You see Klarna moving more into affiliate marketing, going down the value chain. So it's definitely a very disruptive moving market at the moment. The reason it stays, I think, is that people need that short-term credit, and it's a frictionless experience compared to going through the kind of banking sector as you used to in the old days. And there's really 2 types. There's 2 types out there. There's the pay later product, where people maybe aren't sure what they want, and therefore it's easy to order 5 dresses, return 5 dresses or 4 dresses, which is, one of the challenges for the retailer is the returns rate. And then you've got the installment product that's more of a thought out product. It's people tend to use that. They have to make the first payment on the shipment, so they tend to think about that purchase, and we see probably a lot better economics for the retailer than we do in the Pay 30. The Pay 30 we still offer, and is still useful, and in certain markets is cultural. So you really have to offer that market, for example, in Germany. But the other interesting thing I've noticed is that some suppliers have changed their business model. If you think about PayPal was the biggest provider in their wallet of credit in both the UK and the US. They were under so much pressure from Buy Now, Pay Later. They've now offered their own Buy Now, Pay Later product, taking apart their existing credit product. So from a business economics perspective, it's probably very interesting in their finance department. So that's kind of a quick whiz on my experience of Buy Now, Pay Later.
All right, and maybe just a quick follow-up question, Brent. You mentioned multiple providers. Sometimes you offer multiple providers in one market. Could you share a little bit about your vision around that for your customers?
Yeah, we think generally that people need more than one option, because you might not get accepted by that payment provider. So just having one is very limiting. They get excited, they want to use the product, and then maybe they don't get through, or maybe they've overspent on their Klarna on other merchants, and therefore need a second option for Buy Now, Pay Later. It also gives you resiliency. So if you have a downtime or anything else, you've got another method still to offer, so people can move on to the second Buy Now, Pay Later product. And also it's to do with leverage from a commercial perspective. If you've only got one player, it's very hard to negotiate. Once you roll these players out into different marketplaces, it's very hard to move customers off one brand to another. So you've made some of your decisions very early on.
Cool. Thank you so much for sharing. And you, Alan? Well, it's a different perspective. You are one of the largest providers here in Europe. How do you see it?
Brent just mentioned 2 very important things. First of all, there is no one Buy Now, Pay Later, as we know, and it's very different from market to market. So we do have these invoice markets. Brent called it pay in 30 days, which are the traditional markets, as we all know, the German-speaking, Benelux, and the Nordics. And they behave very differently to the traditional, let's call it credit card markets, like English-speaking markets, the UK. And I think it's super important to understand the dynamics there. So we do have already a big market share in the traditional markets invoices, but the new, let's call it the new version of buy now, pay later is rising very much. And that's, by the way, one of the success factors. So since 10 years, they are on the English speaking markets, the traditional credit card markets. We do have totally different markets. Again, Lebanon here in the call, India, different cultures, different payment behaviors, even different salary behaviors. So there's a lot of potential, and it's a green field. So that's why no matter what the media is saying at the moment, Brent said it already, it's here to stay. So that's super important. And the other thing Brent already mentioned is, will there be a consolidation of the market? Yes, not 100% clear from my perspective where it's going. So we do have these really big consumer brands like Apple, big techs. Do they cannibalize the other consumer brands? Are there more techy buy now, pay later? Not so much consumer brands. So I think it will kind of, we will understand the dance, what's valuable and what's not valuable. But I really think, speaking of the view of the end consumers, I think that the end consumer will have the opportunity to use buy now, pay later wherever they are. If it's in store, if it's online, if it's in the checkout before purchase, if it's after purchase. So I think that's the next horizon, and why I do really think that we are at the beginning or in the middle of the trend.
Cool. And maybe also a quick follow-up to you, Alan, because Brent raised Klarna stepping into the affiliate game. How do you see that? Did you expect it? What's your could you share your thoughts on it?
Again, so there are a lot of different business strategies. So our perspective means the Avato Afterpay is we do enable the brands, and we do ideal customer experience for the end consumer. Yes, that's why we have an end consumer brand, but we are not stepping into, let's call it, retail brand or a retail game or brand game. And I think the consolidation will be exactly around that. So what kind of brand like or retail like ASOS, what do they accept from a partner? Maybe smaller brands or smaller retailers, they need more backing off from their buy now, pay later provider. And I think around that, it will kind of decide what kind of partnership is the right for the different brands or retailers. We totally believe it's the right thing to enable the brands and the retailers.
I actually see one question popping up already. Let's start directly. So which challenges do checkouts see, or the others here, of course, with Klarna's new marketplace strategy? If ex-Klarna owning more data at the expense of the merchants? I think a valid question for Brent.
Yeah, I think it's definitely something we are thinking about, and the problem is, as you move to these buy now, pay later marketplaces, they're trying to replace the merchant in some ways, and who owns the customer is the key challenge. The language often used is that it can be their customer, whereas ASOS will think it's our customers. I think what it does is it puts up a few barriers sometimes in terms of what data you're willing to share. So I do think it will be a challenging area to come to some kind of agreement in the future of who owns what data.
Cool, thank you so much. And then Anastasia, also like more from, and I'm just playing around with the Q&A box, as you can see, but over to you, Anastasia. So also from a product standpoint, like how is buy now, pay later transforming payments, and what is different about it as of a product? So how does it differentiate itself from, I don't know, for example, financing?
Yeah, so that's a really great question. So if I think about the buy now, pay later solution when they jump only to the market, that's already from the technical perspective was very, let's say, mature. They tried a lot new stack of technologies, which leads also and helps business, or at least the companies like Arvato as well, or Klarna, try to test different payment options for different cohorts of users, so the end users like buyers, and also how they can improve service for merchants. If we think about the financing product, they are more still, as you know, more bureaucratically wise, they are more restricted. there are still a lot of processes around, manual processes around the in financing, and also it affect your credit score most of the time. And for retailers, all the retailers have to have, for example, the contract directly with the bank who provides that loans for them. So basically, there are more restrictions versus the buy now, pay later options which we have on the market. So I would say that from product perspective, when we think about from checkout point of view, we think about providing the best products at the market where our merchants can offer different payment options directly from one experience point of view. Because of course, each provider has different technical integration, API documentation, etc. We still try to come up with one experience that also helps enable better merchant integration flow. And from the product point of view, I think this is a great area where in the future there still will be a place where different payment options can be tested. There still will be more introduced, like as affiliate programs, marketplaces. But again, this kind of idea activate more markets and also helps for cross-border payments. So if you take a look on Latin American market where cash more is more important as a, let's say, way of pay. At this case, if we think about bring this kind of buy now pay later solution to that market, so then it will also reduce the amount of cash on delivery at that case. So I think there are many areas where it also improve, let's say, end buyer experience, of course, better onboarding process, KYC, etc. That also helps to purchase. Time to purchase is way more limited than it should be, than it's with financing. And that also helps a lot to basically allows millennials actually to start pay a bit earlier. So if you see on the market now that average age for buying with buy now pay later solution is around like 28, 35 years, where there's still a great option to pay.
Thanks, Anastasia. I see popping up another burning question. What do you think about buy now, pay later in the UAE market? Brent, any ideas?
Well, we know there's a couple of options, and we've been looking at that probably for the last year. And I think cash it's an alternative to cash on delivery. I think it will impact cash on delivery because it gives the customer that comfort factor that they could take it as a credit product and therefore return it. So I think it's got a great opportunity in the Middle East.
Yeah. And I think what I can also share on the Middle East, the UAE and Saudi as the biggest e-commerce market, I think it makes tons of sense as well to test it because Brent raised the issue around returns. It's always a challenge. But in these markets like Saudi and UAE, the return rates are way lower than here in Europe and especially Germany. So it's a great opportunity to get foot on the ground. So definitely an opportunity at this current stage. Over to you, Anastasia.
Yeah, just a few cents from my side. So basically, if we think about the MENA region, that's still, let's say, more regulated and a lot, let's say, acquiring bank have to be on the background for that. However, I see that, for example, as a buy now, pay later solution as Tamara, with whom we are partnering, and as you know, we also offering such solution. That's a great product which already can resolve such kind of issues with cash on delivery.
Cool. Yeah, and the numbers to share here are really booming because two digits growth every year on year. Taking away cash basically, so it becomes a cool market for new merchants to entry, but of course quite complicated when it comes down to regulations, isn't it, Brent?
Absolutely challenging.
Yeah, I see another one popping up already, so everyone is active. Thank you for that. What problems might merchants run into with regards to legal POV or GOV laws regarding financing and buy now, pay later?
Read that one again.
You see it as well, Brent? You see it popping up in the Q&A box? Yeah. Or maybe Ellen, would you like to take this one?
Yeah, I'm trying to process the question. Is the question on regulatories? How merchants? Okay. So I think the question and also the following question from the same person is addressing very well that we do have different regulatory situations, even in Europe, and this not even addressing like in different markets. And the regulatory is not yet ahead of buy now, pay later, and this is a problem. We all see that in media. We do have this really bad trending on TikTok, like hashtag buy now, pay later provider debts and all that stuff. So this is obviously something which should be regulated. The question is how, and the question was on merchants. How are merchants dealing with the regulatory situation? So my first advice is find a partner who tries to be ahead of the regulation. This means try to educate your, or also the buy now, pay later provider, try to educate the consumer, try to be as transparent as possible, means proactively pushing, having a really good overview. It means using the data or as best as possible to understand is this consumer, can they afford it or not? And again, really kind of using partner or partner with partner who are trying to be ahead of the regulation. I think that's super important. For service providers and buy now, pay later, this means you have to be ready. Your product has to be ready. You have to deal with the market share decrease if your product is not ready and all that stuff. But some of them, as I said, are ready already. And I think as a merchant, you should really look out for them who will try to be ahead of the regulations in the different markets.
Thanks, Ellen. And Brent, anything you would like to share on the legal side?
Yeah, I mean, I think it's, I mean, we see the regulation as a positive thing because, we want to give the customers a good experience. We want to deliver that experience to them. We don't, and having more data in terms, and there are some providers today that already do that. I know Avato do checking. I know PayPal certainly do checking on. They're probably running 80-85% of the checks themselves, and then they use an Experian for the remainder. So there are providers out there already putting that in place. It'd be interesting to see, because interestingly enough, when I look at some of their return rates, it's kind of different. So whether they're attracting a different customer and filtering out the bad customers, I guess that could be what's happening. But it's being able to get the ability to see customers having more than one outstanding debt with a buy now, pay later provider. That's the key, because having one small debt with one like a Klarna or a PayPal or whatever isn't a problem. But if they have 10 outstanding debts with 10 buy now, pay laters, that's the problem. It's sharing that data with the credit bureaus or the regulators to be able to see that person shouldn't be able to take out another buy now, pay later. That's where the challenge is.
Yeah, and do you see a big difference between the UK and Europe, or is it following the same kind of routines?
I think it will follow the same. I mean, I think the problem is with the big market is Germany, right, where it's kind of it's culturally hard to change. I think the UK certainly will, just because the way the press attack it in the UK is quite aggressive, the way it comes out in the media, therefore. But I think it's the right thing to do. I think from a customer experience perspective, what we tried to do in the early days when I was working with buy now, pay laters, we tried to look at what the risk profile was with that provider. So, was it prime? Was it subprime, subprime? Because, that's what happened in 2008, right, with the housing crisis. What is the risk factor that they're using in the calculation? Because that allows you to filter out. It will impact your conversion rate, but at least it will give you a feeling that you are offering the credit to the right customers that can afford it. So looking at what they let through and where their risk profiling is certainly worth looking at.
Thanks, Brent. Thank you so much. And I see another one, which is quite interesting for the both of you, but starting, I think, with Ellen. So, Ellen, what are the key features of Vato, Afterpay, and other buy now, pay later players they need to improve or add to build the loyalty among users and to win more market share? And I think what is meant to be more future-proof.
So I would thank you for that. I would combine that with the question of Hadia. And first of all, I'm super happy, as Stephen said, that you're so active. Great, wonderful. It's much more fun. So Hadia is asking us. I think she was referring to what I said. We're in the middle of it. So at the moment, we, the end consumer, we can have buy now, pay later where we are on the checkout, starting in store. But the future, and this is the near future, is wherever you are and whenever you want it. Like, as I said, before purchase or after purchase, if it's in store, is it online in the checkout? Is it even in the metaverse or whatever kind of reality we'll face in the future? You will have an option, very flexible. How do you want to pay it? It also can be, by the way, also already live in your banking app after a purchase. So that's where we're heading. And again, everyone is building that already. And it's on the street with some kind of beta versions. That's why, as I'm saying, we're in the middle at the moment. The future will be the end consumer can have it everywhere where they want to have it. And now to Mario's question. So speaking of loyalty and market share, I really think it's convenience for the end consumer at the end. So this is always the game which is happening. But the question is, as a buy now, pay later provider, do I have to be Apple or can I be in the background? And that's an identity discussion. Everyone needs, like providers and merchants, ASOS need to have what kind of players they want to bring in their game. There is a lot of potential, again, moving in the background. There will not only be Apple. I do think that everyone will offer a kind of a buy now, pay later feature for the end consumer. And that's also the strategy of market share and loyalty. It's consumer needs and convenience and flexibility. And on regulatories, the whole trust and control part.
Cool. Maybe on a follow-up on that, Brent, because I'm quite curious now. What would you like to see providers are doing in the future? What does ASOS need, or these type of large retailers? What are you looking for? Because you guys built your own community. You're after customer lifetime value all the time, returning customers. So
I think it's it's a big question, but I think one is coverage. Coverage is, if you're not careful, there's very few global players, if any. There's quite a few regional players, and then there's very local specific players. And the problem for the merchant is doing all of those integrations and managing those integrations. And once you've done one buy now, pay later integration, you're more likely to roll those out into other countries because the resource it takes to do it is very limiting. So your first integration might take you 4 months, but then rolling out additional countries is 3 weeks or 2.5 weeks, because it's basically web and apps and front end. And so coverage is important. So maybe through the M&A and how this disruption plays out, that might solve itself a little. So I think having a strategy around that and then bringing that to you in terms of your core markets is important. I think if we go into regulation, and we will do, which is a good thing, how can we almost get a pre-credit score so the customer knows that if they go into Klarna, they don't have to go through the process, but they've already got a good credit rating, a bit like you're getting credit cards, because that will then cause that payment to go through. But I also think you probably need a bit of friction, because if everything's frictionless, the person doesn't really know he's ordering it in some senses, and it can be a bit blasé. I think a bit of friction is a good thing to have. And then I think finally, one of the options that's not really we've looked at but not really taken advantage of is how do you put your brand partners together with your payment partner and drive more additional value. For example, I don't know, Avato working with us to position Adidas trainers in Germany. How do we put those brands together so that everybody in the ecosystem gets more out of it?
Cool, thanks. And you, Anastasia, because Brent touched upon integrational challenges by adding multiple providers, and that's, I think, key in what ASOS is good at, adding lots of providers and making a local approach everywhere around the world. But how do you see that, in how do you want to orchestrate these kind of different buy now pay later providers for checkout?
I think from the from checkout perspective, when we do integration in that case, of course, what Brent already mentioned, that it's complicated to integrate each payment provider separately and also enable all the payment options. So basically, I think checkout would be one of these kind of platform which supports and can help test better payment options for your specific business, retail consumer. Because if you are integrating once the portfolio of, for example, APMs, which payment methods which you would like to enable, you can collect all your metrics. You can see how that's bringing value to your business, and then easily, let's say, rearrange, include some other payment methods, so you can actively test and launch different markets. It can be also around global solutions, like for example Klarna, and also for specific local markets like MENA with EU. So that's one thing. Around the end user experience, what I think, because each buy now pay later payment method offers different payment options, at the end of the day, end user would need to have the entire portfolio, what is actually allowed specifically for him, and end user buyer doesn't care really what service provider he needs to pay with. He needs to understand what is really his options which are allowed to him, and also what is the best for him. So there's also would be a bit different idea of future solutions.
Thanks. And thanks again, guys, because everyone is super active. I received many different questions. And I think this one is a follow-up, actually. Brent, you touched upon it already. You say like, hey, if someone has a great credit score, why not sharing it somewhere to basically add a value on the customer experience, not frictionless, because some friction was good, you said, but I mean like to smoothen the process. So I have a question here about, do you feel buy now pay later providers are sharing enough data with merchants? For example, decline reason codes, analytics, in-depth consumer reporting, or does this need to have future development?
I think it varies with providers. I think very few give you the decline codes. You obviously get a lot of the decline codes with credit cards. So, you know, if you look in the industry, we're used to using those decline codes. So it's very hard to get that data. It's hard sometimes to get what the true conversion rate is. And it's hard to understand how long it takes a customer to go through their process, and are some more efficient than others. We do get some consumer data. We get some metrics with the bigger players working around what the demographics are, who's using it. But I would say still today, there's a bit of a standoff between the merchant and the buy now pay later provider. And I think it comes down to who owns the customer again, and that debate we talked about earlier about brand versus being in the background. It all ties into that kind of same scenario.
Stephen, I would love to add to that the conversation. That it's not, I mean, we tend to discuss that on very gray and black, white and black, means you do it yourself or white labeled, or kind of the really big brand who owns data, owns the customer relationship. But there's a lot of stuff in between. So there are a lot of dances in between on gray labeled, where you can have a partnership where you can agree on kind of, as the buy now pay later provider, as an example, featuring the brand and the customer experience from the merchant, sharing the data and all that stuff. So it's not black and white. And that's one main decision criteria, the data question, when you decide on a partner for buy now pay later.
And I think, cool, Stephen, what that ties into as well is it ties into how do you, you know, what that data would help you do is to orchestrate those payments in your payment stack, right? Because what you can do with data like that is then cascade and move traffic around potentially to work with an alternative buy now pay later. That's where that data would be useful. Interesting,
super interesting. Thank you so much, guys. Just one step back, going back on UE, I see a question popping up. So Tamara, for instance, is offering buy now pay later only if the payment method is credit card. do you think that the integration of other payment methods, Apple Pay, for example, or other, will help in the sustainability of buy now, pay later? I think what is meant is that you can pay the invoice by credit card, but maybe a question for you, Alan. How important are the payment methods in order to basically pay for your invoice?
Yeah. So we are not in this market, but we totally see that if it's, I mean, the whole beauty of buy now, pay later is inclusion. And inclusion is very often not linked, or the opposite of being linked, to credit card. So of course there should be different options to pay.
Yeah, this is of course a special market. So maybe Brent, if you think about UE or Saudi, how do you see that? How important is it? Like, I think what they are meaning is that the product is built on top of a credit card, but
yeah, well, maybe that, I mean, maybe that's around their business model, right? Because if they're settling with the credit card, I'm guessing they're getting a cut of the interchange somewhere in that model, which therefore allows them then to maybe go more aggressive on their fee pricing. So it's trying to get to the bottom of why they're doing that, because typically in the ASOS demographic, typically millennials would use a debit card and not a credit card. And I don't know particularly in Saudi whether a credit is more popular than a debit card, but in most markets a debit card would be the preferred settlement method. And I think you still have the challenge I think with the Apple Pay, because we talked about it a little bit, is that Apple Pay don't work with you that well. It's the Apple way, right? And putting buy now, pay later in there that's backed by MasterCard, are there going to be new scheme fees come on for using buy now, pay later in that format? I don't know. So is that going to impact the merchants in terms of increasing fees? Because you're going to see that payment come through, I would imagine, as a credit card payment on your bill, as it does today with Apple Pay. So depending on what they set that buy now, pay later interchange and scheme fee as, it could be quite expensive for a merchant.
Yeah, 100%. And I see already, and I was actually waiting for this one, which is kind of cool because it's linked to crypto and open banking, and it's a hot topic. We saw Amazon talking about like what are they doing with Visa card and other type of discussions, and a lot of big players are thinking about to lower down the cost. So what I see here is, let me check. Yeah, so how do you think the competition from A2A, open banking and crypto players will be in the future of retail? Big question, they said, but how do you see it's linked to buy now, pay later, Alan?
Big question. I'm not sure if I do have an answer, but speaking of future of retail, and now I'm not answering perfect or directly this question, but the future of retail for me is very clear that where the consumer is, there will be the reach and the monetization of it. This can be social, this can be other versions of new realities, and I do think that buy now, pay later, or even crypto is just one method to do so. So I don't think that that these, let's say, features or methods, they will not play the main role. It will be the user experience at the core of the service people are using.
Cool. And you, Brent, if you think about open banking, normally it's about lowering the fees. How do you see that ending up at ASOS?
Well, I kind of see that in Germany it's probably open banking in theory anyway, because it's SEPA settlement, right? It's SEPA or bank transfer. So in Germany, it's almost at the open banking level. The open banking's been on our radar screen. We've been talking about it for 3 or 4 years now, I think. And it's quite well developed in the UK because they had that one API standard, whereas in Europe and everywhere else, it's very different, and it's very hard to just have a specific product for a specific country. We'd like it to be scalable. So if we did something with open banking, say with Klarna in the UK, but it wasn't scalable into other countries, it would make more integration work every time. So I think it has to be universally accepted. Crypto, interesting, still volatile, a risk for merchants that the value goes up and down, and therefore you have to account for that in your financials. And I think once it becomes a controlled by the banks and it's backed by the banks, then that would be probably the opportunity to look at it in more detail.
Thanks, and also being cautious of time now, guys, because the burning questions are popping up every time. Just stepping back a little bit directly on buy now, pay later. I think it's a fair question. Can buy now, pay later trigger a higher fraud risk?
So it's different fraud. First of all, the risk is with the buy now, pay later provider. That's the first important thing. So the fraud risk is not with the merchant or with the brand. Means the buy now, pay later provider needs to manage all the kind of chain of fraud moments. And of course, there are different ways to do that, as everywhere. Yeah, but I think the beauty for the merchant or the brand is you don't have to deal with it. So it's on the provider side.
Yeah, I think where it comes to the retailer probably is, because in the commercial contract, we have to make sure that the parcel is signed for or something at the door, so to kind of avoid friendly fraud.
Yeah, and it's that's an important element on why buy now, pay later is such a game changer for retailers as well. I think we did, yeah, of course we touched a little bit on it, but anything you guys want to share around the consumer risk, like what are they facing when you pay basically with buy now, pay later?
The consumers or the
consumers, like. Well, I'm a consumer. I pay for my, or I'm not paying for my goods, but then you receive an invoice. Anything specifically, or do you think like it's such a well monitored market that the news is actually not always in line with what you see in your operations?
So what was eye-opening for me when I saw kind of a consumer psychology diagram, which all of us have, like normal people, normal humans. If you buy something, then you have this excitement stage and then you get the goods and then it's totally decreasing, which is super normal for every human. This means buy now, pay later, if you do not kind of pay directly, is falling into a psychology curve that everyone don't have the attention on it anymore. And you can, as a buy now, pay later provider, or even as a merchant, you can play that good or bad. So you can say, okay, Ellen got her bag 3 weeks ago, so we have to remind her, please be very transparent and make it a good experience. Or you can work with it and kind of letting the consumer get into the trap. And I think that's super important to understand that the whole attention from normal human beings are on the highest moment when they buy it. Again, choose your partner then wisely.
Yeah, thanks for sharing, Ellen. And you, Brent, anything you would like?
I think it's that messaging and getting that message and that customer experience at the front end. If customers do come into our customer care, then they have to be handled carefully. We have to explain to them. We have to manage that. We have to feed that back to the buy now, pay later providers and go through and analyze that data. That's what we would do to a certain extent.
Yeah, maybe good. So by adding buy now, pay later, is it like creating more operational work for you as a company, Brent, compared to other payment methods?
I think it probably does. It depends what it is. If it's pay later or invoice financing, as you call it, then you're going to have high returns. It's not a hidden fact out there in the press. Whereas I think if you go to the installment product, then I think it's a lot of our KPIs. It's a product that is a thought out purchase that people normally will maybe use in the third week of the month when pay's coming through the following week. So we do see that people use that a lot more efficiently than the pay in 30 one, which is, cool. As you were talking about earlier, we'll get that psychology of all those products sitting there and you return them 3 days, 4 days later once you've gone down the experience, the excitement experience.
100%. I think we also need to tackle this question because it's fairly interesting. Because how does offering buy now, pay later as a payment method assist with customer acquisition? And I think, Brent, you're the perfect person to answer this one.
Yeah, it definitely. I think that, and probably as it's well known in the press, probably an increase in ABV as well. So, you'll see a spike in ABV because people realise that now they can space the payment out and spend slightly more on site, so your ABV goes up. And I think as you've got many players now, and this is the problem around this affiliate model is, or your customers being sold somewhere else. So what you can get from these buy now pay laters is a lot of access to a lot of customers. And if you look at, I don't know, somebody like PayPal, they've got 100 million users in the US. They've got 35 million users on credit. That's 35 million customers you could potentially target or try to target with PayPal as a partner. Klarna, I think, I can't remember the latest number, is it 90 million or something? So all of a sudden you've got access to that data and those customers. The model appears to be changing slightly though, where they maybe want to charge you for that and become more of the Google affiliate marketing type model. So I think it does give you access to new customers.
Amazing, thanks so much. And being conscious of time again, one piece of advice would you like retailers to take away from this conversation? So as they build their buy now pay later strategies for 2022, 2023.
For me?
Ellen? Yeah, Ellen?
Wonderful. So I think I said it already. Understand what kind of partner you need and what kind of level of seniority you have yourself as a merchant. So if you're ASOS, you can choose openly what you want. If you're a smaller player, try to find someone who is already kind of more efficient in all that stuff. And it's totally about what kind of customer relation, consumer relation you give away or you get. And I think that's an understanding every brand or every merchant needs to kind of get individually.
All right, and you, Brent, what is your piece of advice for today to close and?
I think you need to understand the market. So you need to, like we've gone through today, I think you need to do your homework a little bit on what's happening. You need to understand the disruption and who might be the players in the future. You need to back the right horse that's going to be there in the future. But I think coverage is important, and depending where you want to be. So we touched upon customer acquisition. If, let's say, I don't know, ASOS is bigger than that provider in the market, we're more likely to drive customers to them than the other way around. So you need to work out, if your KPI is customer acquisition, you probably need a big player in the market where you're small to drive that customer acquisition. If it's some other kind of metric, then you just need to understand what your KPIs are and try and culturally align with that provider so you've got a similar KPI understanding.
All right, guys. Well, we are just in time. 1 minute left. Thank you so much, Brent, Ellen, Anastasia, for joining us today for our Build Beyond session, touching upon buy now, pay later, a super hot topic. And for the crowd, thank you so much for joining us as well. We hope you enjoyed it, and feel free to always reach out to us if you have any questions. We are happy to do this more often, so you will see more Build Beyond sessions coming soon. And we will follow up with an email in order to provide you with additional information. And I wish you a pleasant summer holiday season, guys. Thank you so much.